All right, let's once again go ahead and talk about the Bitcoin price action as well as we'll add in some economic data because we did have CPI today as well as unemployment claims, which didn't actually come out in our favor. We'll talk about that if it's something to be worried about. But what did actually come out into our favor was the price action. So let's go ahead and talk about this Bitcoin chart right here. We were expecting a bit of a pullback here, and we had identified our levels of support, those of which being 59.5. 57.5 and then potentially all the way down here to $53,000 to fill that CME gap. And so far, I gotta say, it does look like the 59.5 wants to hold. We jump in here to the hourly time frame. You can see these pixel perfect hourly closes right above this volume level on a very nice 1 hour bullish divergence, regular RSI bull div. So that's pretty good confluence there. RSI bull div along with volume was a pretty good setup, as well as a sweep of this liquidity down here. We had been looking at the liquidity maps over here on CoinGlass. Let me go ahead and refresh this for you guys and go out here to the 2-week time frame. I think that'll probably show it best. And you can see we have come down and grabbed these lows, cleaning out a lot of that liquidity to the downside. So a nice flush there on the long positions, got some leverage out of the market with this move. That's pretty nice to see, and we are seeing a very nice reaction off this level, now getting back above that sweep level on a higher term time frame. Candle closes. You look out here at the daily, and we have just turned this into a wick to the downside. So we'll see if this does actually become the low. I'm much more confident now in being bullish than I was in the last few videos. I kind of flipped bearish a little bit, but my base case remains the same. Do we still have to worry? Yes, we still have to worry. We're going to get into some of these economic numbers and tell you why. There's still a very high probability we are entering a recession very soon, and there's never a guarantee we're going to make another all-time high here on Bitcoin. So still need to be cautious, but so far I like what I'm seeing here on the charts. This is looking very, very nice for a potential low coming in at our first level of 59,500. Something else that played out how I was expecting is our Bitcoin dominance. So not only is Bitcoin looking set up pretty nice here, but the altcoin market is setting up even nicer, and I do think a potential altcoin season could be on the horizon here. We look at Bitcoin dominance, we have now accepted back within this range that we've had here on the chart, right? Range bound area breakout, deviate back within. I was getting real bullish when we had it back tested it as resistance here and started to fall, but we did have another breakout, but held the lower high, and we're now deviating back with inside this range. So still need some more confirmation here, but so far this looks like a potential setup for dominance to start going down and for the altcoins to start running. So we'll see how this does play out. It's a bit premature to really know what's going to happen here. This could get turned back into support very easily. So I would say for real confirmation, we want to see some lower lows here on the chart, start an actual breakdown below this range for that true confirmation that an altcoin season may be playing out. And I think for more of that confirmation of an altcoin season, you need Bitcoin to break all-time highs for that euphoria to come back into the market. Now let's jump into the traditional finance charts, starting off with the S&P 500 and then the Russell, and then we'll talk about those economic numbers that are pretty crucial that we got today with CPI. First things first, the S&P continues to march on up here, climbing the wall of worry. A little bit of consolidation today, but really not showing a lot of weakness at all. Still just putting in higher highs and higher lows here on the chart. Looks like we're finding support on the previous all-time highs, potentially going to go ahead and continue to march up into all-time highs, which of course is going to be pretty good for the rest of the market. Everything essentially follows the S&P 500, including the Russell 2K, and currently crypto is more correlated with the Russell than the S&P, so we got to keep a close eye on this chart. And you can see we did sweep the lows here on the Russell, very similar to what Bitcoin did. Didn't quite get to the value area low, but that's okay. We don't need to go ahead and test that volume. If we are showing support here, that could be the low on the Russell. We want to see if we can get above this point of control. Once again, a bit premature to say what's going to happen here, but I do like the structural setup on the Russell right now, and it could be signaling that a low is coming in for a potential rally on up to break out of this descending channel that we've been in on the shorter term time frame here. So I like what I'm seeing here today, but I'll make sure to keep you guys updated when we get more confirmation on this potential breakout over here. Now let's go ahead and talk about some of these economic numbers that we got today and if we really have to worry. So first things first, we'll go ahead and look at the economic calendar. CPI month over month came out to 0.2% versus the forecasted 0.1%. So inflation is going up more than expected in both CPI and core CPI, which is not good for the economy, but it didn't go up from last month. It was just worse than expectations. So they were expecting it to go down. It just stayed the same. Not really the end of the world, but definitely not best case scenario there. Something that did come in worse than last month was the unemployment claims. You can see this has gone up over 30,000. So definitely not a good sign that we're seeing more unemployment throughout our economy. This is a big recessionary indicator. Whenever you have unemployment going up, employment going down, the unemployment rate is kind of the biggest recessionary indicator out there. So let's go ahead and look at some of these unemployment charts. So you can see the unemployment rate has been continuing down for the last couple of months, but this does not include today's reading, so we'll have to wait until November to actually see what the next number is here, and this is going to be a huge data point to suggest if we are actually entering a recession or if this is going to continue on down. I have been saying I expected a couple months of downwards swing here in the unemployment rate, but I did expect it to start marching back on up. So we'll see if November's the month where it starts going back up, or if it's just going to stay the same in November and then start marching back up, or if it is just going to continue to drop on down. The more this drops down, the more room we have to run for our markets in general. The more this heads on up, of course, that's going to signal recessions are getting more and more imminent. So the fact that this is so important is the reason why we need to be paying attention to these unemployment claims, because these will be forecasting what this unemployment rate will become. So far, the month started off really good, and then now we're getting some bad numbers. That's just one data point, though. We get these claims very often, so we'll just see in the following weeks as those data points come out if it is actually looking continuously very scary, or if this is just out of the norm potentially because of hurricanes, etc. And then we can get right back to business of a healthy economy with this continuing to trend down before a recession does play out, maybe much later in the future, maybe years from now. But only time will tell. The biggest thing we can look at right now to forecast the short-term future is the charts, and the charts don't necessarily scare me. I think this move we got on Bitcoin today was fairly healthy, but we will watch this closely. Let's stay vigilant in the markets. The big level to watch right now is this previous sweep level at 59,850. Let's see if that can hold, if volume can hold here. We don't want to be losing this stuff. If we do lose this wick, then yes, you're definitely looking at around 57, 57.5, or potentially even a sweep of all the way down here at $53,000 where the CME gap is sitting. But if you do have any questions about anything I talked about, or just want to join the community for this channel, link to my Discord is in the description down below. Also have a VIP Discord down there, so feel free to click on that link to read more about it, see what it offers. It is 25% off right now, by the way, if you use that code. And then also down there you'll see a bunch of my exchange partners, so make sure to go check those out and use my referral links if you want some good rewards and bonuses when you sign up to their exchanges. But with that being said, thank you all so much for watching, and I'll see you all in the next video.